my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. It is comforting to see, yet again, that the market is still just about keeping within the May to October 2020 bullish shift pitchfork. Prices have most recently moved down from the deeply challenged and deeply breached upper tine, currently at 23.93, down towards the middle tine, currently 22.24, but have balked at really testing it. I suspect this may be due to two reasons. Firstly, we have a huge bank of congestion formed during May to June between 21.15 and 22.20. Secondly, we have creeping up and into the frame the rising medium moving average, currently 22.13. That's just below the middle tine. I suppose you could also count the middle tine, though I think that is a lot less of an obstacle than those other two. We have seen indecision here before. Back at the start of July, when the market started to have contradictory actions day after day, indicative of pretty heavy indecision. And this indecision was channeled into forming an ascending triangle over July. We've had strong indicators since that time, a weekly key reversal up, as well as the triangle, as when the triangle came to the cusp, and it looked like we'd break higher. And though we moved higher, we didn't manage to really go much beyond the upper tine, or the big 50% Fibonacci line of the 2010-2011 move at 23.78. This failure to succeed on the upside led to the contrary move lower and weekly key reversal down 3 weeks ago, plus what may be a falling wedge pattern since roughly the start of August. Now, as to whether the falling wedge pattern is bullish or bearish is an interesting question. Data indicates that something like 7 out of 10 times these patterns tend to have a bullish outcome, but their topside targets levels tend to be short in distance. We haven't had a confirmed break upwards as yet, but if today was the day, then you could see an initial move up to about 23.85 and a secondary move up to the 24.28 area. This is not marked on the daily chart as target or targets yet. As I've said earlier, that we have not had a confirmed, we just had a breach at the moment, we've not had a confirmed move higher. But I thought you ought to know just in case. In all these moves, it is important to remember one key thing, something I've stressed again and again. This market is still overall bullish, as I stated right back at the start of all this and earlier commentaries. We are still within the May to October 2020 bullish shift pitchfork. Until that is broken or replaced by another pattern, then it still is the supreme pattern. LME 3-month tin. I have been repeating this here for weeks and weeks, and despite the moves last week, it is still valid. I should say now, that is something I think that some of you, dear viewers and listeners, may find hard to realize or believe, but it is true. It is this: the overall bullish incentive is still alive and strong here. I'll let that sink in for a moment, especially as we have a move down of about 15% within the last week. Okay, time's up. So why do I say this? Well, it is because the original move back up, which started some 24 weeks ago with the January to March bullish shift pitchfork. This bullish pitchfork has driven prices higher all this while. Now, recently prices have reached up and pierced the upper tine, currently at 35.420. This move higher, though setting new all-time highs over the last 2 weeks, also highlighted some indecision within the market, as if this move up might be a little bit too much on the upside, outside of the upper tine. The final iteration of this was the small double top formed over the last 2 weeks as prices broke down through the recent bull channel. And then there's the elephant in the room, the drop last Thursday. This drop left the market with the only bullish talisman still standing on the top side, the upper tine, currently at 35.685. Prices dropped down through the middle tine, currently 33.305, as well as the short medium moving average, currently 32,900. But prices stopped short of testing the lower tie, currently 39.20, and its recent partner that has reinforced it, the rising medium moving average, currently 39.60. It was, as I said last week, and I quote, overall, it is, as I've said, week after week after week. Until this pitchfork is broken or amended, then it will still govern the bullish incentive. The bullish shift pitchfork is still the one thing this market has to deal with, and prices can drop quite a way before they break the pitchfork. That doesn't preclude us from looking out for early signals. Yeah. That's the problem when you see the market rely so much on one pattern. It can be hellish when it breaks. End of quote. I would add only two small final items. I've drawn a new mid-June to mid-August bullish Andrews pitchfork. It is a speculative move on my part, as it is very early on as yet, and I may end up with finessing it into a shallower bullish shift pitchfork. Secondly, I've also drawn a 50% Fibonacci line for last week's move. It is about 33,605 and is a significant new obstacle, I suspect, in any further journey higher. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.